Oh boy, would you look at that?
Wow.
That is from our helicopter, right?
It's the Wolf Moon.
Wolf Moon. Man, that is a beautiful shot. Glad we could
Gorgeous.
kind of enjoy that. All right, we've got a little science now to finance. The mobile trading app Robinhood is restricting trading on GameStop, AMC, and a bunch of other stocks because of market volatility. Amateur investors caused the stock prices to skyrocket as hedge fund managers bet against the stocks, short selling them. The inflated stock price caused the hedge fund managers to lose millions of dollars. Robinhood users have now filed lawsuits against the app for halting those trades.
And that movement by a lot of small investors has a lot of people talking today, wondering what does this mean for the markets?
And so we are joined by Scott Bauer, the CEO of Prosper Trading Academy. Scott, thank you. For those who are not really into trading, I think if you've seen the movie The Big Short, you get the idea of the concept here. But briefly, if you would explain for us what is happening in this situation.
Sure. So anybody can short a stock, and it's very difficult to understand what that means, but you can actually sell something that you don't own. So when a big hedge fund, a big, conglomeration thinks that a stock may be going down for whatever reason, they can start selling shares that they don't own. Well, in this case, Melvin and a few other big hedge funds were shorting the shares of GameStop over the last months and even years with the hopes that they would be able to buy back the stock at a much cheaper price, even if the stock, went bankrupt and they went to zero. Well, what happened over the last few weeks, and it's been building up a little bit, is there were some, let's call it online traders, that's what people are talking about, the Reddit traders, that started buying up the shares. And it wasn't just one or two or three or four people. It was a lot of people started buying up the shares. Well, what happened was FOMO started kicking in. The mountain kind of snowballed here. And the people, the hedge funds that were actually short the stock, that had sold the stock hoping that it was going to go lower and lower and lower, all of a sudden found themselves scrambling to try and buy that stock back because it was moving higher and higher. Now, in the history of the market, and I've been doing this professionally for 30 years now, we have not seen what's called a short squeeze like what's going on right now. So these major hedge funds who were short the stock just from literally $20, $30, $40 now have to run and try and buy this stock back at 100, 200, 300. That's how, that's where this got. So that's how this all came about. And that's where these major losses are not even just in the millions, they're in the billions of dollars for these hedge funds.
So who's really being affected? There are a lot of companies that are being affected by this. And also they're saying that it's the young traders. Why do you say young traders are starting this short squeeze?
Well, they're saying young traders because those are the traders that kind of get together on this Reddit platform, and also trade on Robinhood. Robinhood is an online brokerage firm that was came to light a few years ago that doesn't charge commission. So their clientele is typically the younger, the Gen X, the millennial type of traders. So that's why they're saying the younger traders here. But the people really being affected are the investors into these hedge funds who lost billions and billions of dollars.
So the app, as I understand it, shut down that trading, and that's what drew a lot of criticism. In fact, on Capitol Hill, Alexandria Ocasio-Cortez and Ted Cruz, polar opposites, actually agree on this, that this is wrong, that they cannot do this. They want hearings on Capitol Hill. What do you think about it?
Personally, as a trader, I don't think there's anything illegal that was going on. So I don't think that the trading should have been shut down. Can they limit the type of trading? Most brokerage firms do that in very high periods of volatility, regardless of which brokerage firm it is. Yes, they can kind of limit what you're doing, but to completely shut down trading and shut down someone's account where you literally cannot get in or out of a position, that's where the problem arises. And I think there may be some serious issues with that.
So what's the end game here, Scott?
Well, the end game is at some point, whether it's tomorrow, next week, next month, my bet is that GameStop is going to be trading back down to where it was just a few weeks ago, probably in, somewhere in the 20s, the 30s, the 40s, because all of these people that have been buying up the stock to force the short stockholders to cover their stock, they're going to start liquidating. They're going to start to get out. This is just the ultimate classic case of economics and supply and demand. Right now, it's a massive, massive demand for the shares of the stock with very little supply. That's what's driving the price up.
Scott Bauer with Prosper Training Academy. Thanks for the explainer. We appreciate it.
Thank you.